The anticipated surge in market demand across the automotive, retail, and telecommunications industries is projected to reach 50% by Q2 2026. This growth is driven by several factors, including advancements in technology, particularly artificial intelligence (AI), and the ongoing recovery from recent economic downturns. Key insights. 1. Market dynamics. The property and casualty insurance sector has undergone significant changes influenced by rising inflation, social inflation, and ongoing geopolitical tensions, particularly between the US and China. Stricter export controls by the US on semiconductors and AI technologies aim to protect national security, reshaping global supply chains. 2. Sector growth. The semiconductor industry is set for substantial growth, with AI driving demand for components such as high-bandwidth memory (HBM) and advanced chips. Reports indicate that HBM's market share is expected to rise dramatically, accounting for 20% of DRAM market value by 2024 and over 30% by 2025. Major players like Micron, SK Hynix, and Samsung are investing significantly in HBM production. 3. Investment initiatives. The CHIPS and Science Act in the U.S. has catalyzed over $200 billion in investments aimed at revitalizing domestic semiconductor manufacturing. However, delays in the distribution of these funds have hindered production timelines for companies like Intel and TSMC. 4. Economic factors. Rising interest rates and inflation have prompted insurers to increase premiums and adjust coverage offerings. The non-life insurance sector in the U.S. reported a notable recovery in Q1 2024 thanks to multiple rate increases that outpaced claims costs. 5. Geopolitical implications. The ongoing U.S.-China trade war has resulted in new tariffs and export restrictions, posing challenges for both countries' tech industries. China's aggressive investments in its semiconductor manufacturing capabilities are a response to U.S. restrictions, potentially leading to an oversupply in the market. Differences between sources. The Amwins report focuses on insurance market trends and their implications for various sectors, while Deloitte emphasizes the broader economic factors affecting the insurance industry and the need for innovation. SourceEngine's semiconductor articles provide detailed insights into specific technological advancements and market conditions, highlighting the connection between AI demand and semiconductor production. Timeline of events. 2022, significant supply chain disruptions began primarily due to the COVID-19 pandemic and geopolitical tensions. 2023, the global semiconductor shortage led to government initiatives like the CHIPS Act to strengthen domestic manufacturing capabilities. 2024, reports indicated a recovery in semiconductor sales driven by AI demand. However, geopolitical tensions and labor shortages posed ongoing challenges. 2025, anticipation builds for substantial growth in market demand across key industries as companies adapt to the evolving technological landscape shaped by AI advancements. In summary, the integration of technological advancements, economic recovery, and geopolitical dynamics is set to drive a significant surge in market demand across the automotive, retail, and telecommunications sectors, with the semiconductor industry playing a crucial role in this growth trajectory. Detailed analysis of sector-specific insights. Automotive industry. The automotive sector is experiencing a transformative shift, primarily fueled by the rise in electric vehicles (EVs) and advancements in autonomous driving technologies. The demand for semiconductors, particularly those used in vehicle electronics and systems, has surged dramatically. Major automakers are investing heavily in AI technologies to enhance vehicle performance and safety features. Growth projections. The automotive industry is expected to see a 50% increase in demand for high-performance chips by 2026, driven by the integration of AI and IoT technologies into vehicles. This includes chips for advanced driver assistance systems, ADAS infotainment, and electric powertrains. Strategic investments. Companies like Tesla, Ford, and General Motors are ramping up their investments in semiconductor manufacturing to ensure a stable supply chain. Collaborations with chip manufacturers are becoming common as automakers seek to secure their technology needs. Challenges. Despite the growth, the automotive industry faces challenges such as a shortage of skilled labor and supply chain disruptions due to geopolitical tensions. These factors have the potential to hinder production capabilities and delay the rollout of new vehicle models. Retail sector. The retail industry is undergoing a significant transformation accelerated by advancements in e-commerce and digital technologies. Market dynamics. The rise of AI in retail is changing how businesses interact with customers, manage inventory, and optimize pricing strategies. The shift toward personalized shopping experiences is driving demand for AI-driven analytics and data management systems. Investment trends. Major retailers are investing in AI technologies to enhance customer experience and streamline operations. Companies like Amazon and Walmart are at the forefront of this trend, utilizing AI for inventory management, demand forecasting, and customer service. Future outlook. The retail sector is projected to grow by 50% by 2026, with AI playing a crucial role in shaping the future of shopping. The integration of AI technologies is expected to lead to better customer engagement and increased sales. Telecommunications industry. The telecommunications sector is evolving rapidly. With the rollout of 5G networks and increased demand for connectivity driving the need for advanced semiconductor solutions. 5G expansion. The transition to 5G technology is creating new opportunities for semiconductor manufacturers. Companies are investing in the development of chips that can support the high-speed data transfer capabilities of 5G networks. AI integration. Telecommunications companies are leveraging AI to optimize network performance, enhance customer service, and improve operational efficiency. This includes using AI for predictive maintenance and network management. Growth potential. The telecommunications industry is expected to see a 50% increase in demand for semiconductors by 2026 as the adoption of 5G technology and AI-driven applications continues to grow. Semiconductor industry. The semiconductor industry is at the heart of the anticipated market demand surge across various sectors. Production capacity. The demand for semiconductors, particularly high-bandwidth memory (HBM) and advanced chips, is expected to increase significantly due to the rise in AI applications. Companies like Micron, SK Hynix, and Samsung are investing heavily in expanding their production capacities to meet this demand. Government initiatives. The U.S. CHIPS and Science Act is catalyzing investments in domestic semiconductor manufacturing with over $200 billion allocated to bolster production capabilities. However, delays in funding distribution are affecting production timelines for companies. Geopolitical risks. The ongoing trade war between the U.S. and China is reshaping the semiconductor landscape, with export restrictions and tariffs impacting supply chains. China's aggressive investments in domestic semiconductor capabilities are a direct response to these challenges. Economic factors. The insurance industry is also impacted by broader economic factors, including rising interest rates and inflation. Insurance market dynamics. Insurers are adjusting their pricing strategies in response to rising claims costs driven by social inflation and litigation trends. The non-life insurance sector is expected to see a recovery, with premium hikes helping to offset increased claims. Consumer sentiment. Economic uncertainty and rising costs are affecting consumer sentiment, leading to increased scrutiny on insurance coverage and pricing. Insurers must navigate these challenges while maintaining profitability and customer trust. Conclusion. The anticipated 50% surge in market demand across the automotive, retail, and telecommunications sectors by Q2 2026 is a multifaceted phenomenon driven by technological advancements, economic recovery, and geopolitical dynamics. The semiconductor industry plays a pivotal role in this growth, with significant investments and strategic partnerships shaping the future landscape of these sectors. As companies adapt to the evolving market conditions, The integration of AI and other technologies will continue to drive innovation and transformation across industries. The anticipated surge in market demand across the automotive, retail, and telecommunications industries is projected to reach 50% by Q2 2026. This growth is driven by several factors, including advancements in technology, particularly artificial intelligence (AI), and the ongoing recovery from recent economic downturns. Key insights. 1. Market dynamics. According to multiple sources, including the AmWin's report, the property and casualty insurance sector has experienced significant changes influenced by rising inflation, social inflation, and the ongoing geopolitical tensions, particularly between the US and China. The US has implemented stricter export controls on semiconductors and AI technologies to protect national security, leading to a reshaping of global supply chains. 2. Sector growth. The semiconductor industry is poised for substantial growth, with AI driving demand for components such as high-bandwidth memory (HBM) and advanced chips. Reports indicate that HBM's market share is expected to rise dramatically, accounting for 20% of DRAM market value by 2024 and over 30% by 2025. Companies like Micron, SK Hynix, and Samsung are significantly investing in HBM production to meet this demand. 3. Investment initiatives. The CHIPS and Science Act in the U.S. has spurred over $200 billion in investments aimed at revitalizing domestic semiconductor manufacturing. However, delays in funding distribution have affected production timelines for companies like Intel and TSMC, prompting some to rethink their expansion strategies. For economic factors, a report from Deloitte highlighted how rising interest rates and inflation have affected various sectors, prompting insurers to hike premiums and adjust coverage offerings. The non-life insurance sector in the U.S. reported a notable recovery in Q1 2024, attributed to multiple rate increases which outpaced claims costs. 5. Geopolitical implications. The ongoing US-China trade war has led to new tariffs and export restrictions, creating challenges for both countries' tech industries. China's aggressive investments in its semiconductor manufacturing capabilities are seen as a response to US restrictions, potentially leading to an oversupply in the market and further complicating global dynamics. Differences between sources. While the AmWin's report focuses on insurance market trends and their implications for various sectors, the Deloitte article emphasizes the broader economic factors affecting the insurance industry and the need for innovation. SourceEngine's semiconductor articles provide detailed insights into specific technological advancements and market conditions, highlighting the connection between AI demand and semiconductor production. Timeline of events. 2022, the onset of significant supply chain disruptions due to the COVID-19 pandemic and geopolitical tensions. 2023, the global semiconductor shortage prompts governments to implement initiatives like the CHIPS Act in the US to bolster domestic manufacturing. 2024, reports indicate a recovery in semiconductor sales and investments as AI drives demand. However, ongoing geopolitical tensions and labor shortages pose challenges. 2025, anticipation builds for substantial growth in market demand across key industries as companies pivot to meet the new technological landscape shaped by AI advancements. In summary, the integration of technological advancements, economic recovery, and geopolitical dynamics is expected to drive a significant surge in market demand across the automotive, retail, and telecommunications sectors, with the semiconductor industry playing a pivotal role in this growth trajectory. The report predicting a 50% surge in market demand across the automotive, retail, and telecommunications industries by Q2 2026 is packed with critical insights, yet several significant elements might go unnoticed or underappreciated, particularly regarding the implications of geopolitical tensions, supply chain dynamics, and the semiconductor industry's pivotal role. Below are some of these often overlooked insights and their significance. 1. Geopolitical tensions and supply chain restructuring. The report mentions the ongoing geopolitical tensions, particularly between the US and China, which are reshaping global supply chains. This is significant because it highlights the fragility of current supply chains and the potential for increased costs and delays. As countries implement stricter export controls on critical technologies such as semiconductors, manufacturers may face challenges in securing necessary components, which could lead to production bottlenecks. The long-term implications of these tensions suggest that companies may need to diversify their supply chains to mitigate risks, which could involve significant investments and shifts in operational strategies. 2. Impact of the CHIPS and Science Act. While the report touches upon the CHIPS and Science Act's role in revitalizing domestic semiconductor manufacturing, the broader implications of this legislation are crucial. The act aims to bolster U.S. semiconductor production to reduce reliance on foreign sources, which is critical for both economic stability and national security. However, delays in funding distribution and the complexities of scaling up domestic production could hinder the U.S.'s ability to compete globally. This situation underscores the importance of fostering a robust domestic semiconductor ecosystem, as the lack of sufficient chip supply can have cascading effects on various industries, particularly automotive and telecommunications, which are heavily reliant on advanced technologies. 3. Economic recovery and innovation. The report discusses the recovery from recent economic downturns, primarily driven by advancements in technologies such as AI. However, it is essential to delve deeper into how innovation can act as a catalyst for economic recovery. Companies that invest in new technologies may not only meet the anticipated demand but also create new market opportunities. For instance, the surge in AI applications is driving demand for high-bandwidth memory (HBM) and advanced chips, which can lead to innovations in products and services across various sectors. Recognizing the interconnectedness of these advancements can help businesses strategize effectively and capitalize on emerging trends. 4. The role of artificial intelligence. AI is mentioned as a significant driver of market demand, particularly in the semiconductor sector. However, the implications of this trend extend beyond mere demand. Companies that harness AI effectively can optimize operations, enhance customer experiences, and develop innovative products. This transformation can lead to increased competitiveness and market share. It is crucial to understand that the integration of AI into business models may require rethinking traditional practices, which can be a daunting task for many organizations. The strategic adoption of AI could determine the long-term success of businesses across the automotive, retail, and telecommunications sectors. 5. The semiconductor industry's central role. The semiconductor industry is at the heart of this anticipated market surge, with the report indicating substantial growth in demand for components. However, the broader implications of this growth must be considered. The semiconductor supply chain is complex and highly interdependent, and any disruptions, whether due to geopolitical tensions, natural disasters, or labor shortages, can have far-reaching effects on the entire technology ecosystem. Understanding the intricacies of this supply chain can help businesses prepare for potential challenges and adapt their strategies accordingly. 6. Labor shortages and skills gap. As the report outlines the anticipated growth in market demand, it is vital to address the labor shortages and skills gap that could hinder this growth. The semiconductor industry in particular faces a critical shortage of skilled workers, which could limit production capabilities. Companies must invest in workforce development and training initiatives to ensure they have the talent necessary to support growth. Ignoring this aspect can lead to missed opportunities and an inability to meet market demand, which can hinder economic recovery. 7. Environmental considerations. The report does not explicitly address the environmental implications of the anticipated market growth. However, as industries expand, they must also consider sustainability and the environmental impact of their operations. The increasing frequency of natural disasters exacerbated by climate change poses risks to supply chains and production capabilities. Companies that prioritize sustainable practices and invest in environmentally friendly technologies may not only mitigate risks but also appeal to a growing base of environmentally conscious consumers. 8. Consumer behavior shifts. The anticipated growth in demand for products within the automotive, retail, and telecommunications sectors is likely to be influenced by changing consumer behaviors. As consumers become more tech-savvy and reliant on digital solutions, companies must adapt their offerings to meet evolving preferences. This shift may involve integrating advanced technologies into products, enhancing customer service through digital channels, and responding to the increasing demand for sustainability and ethical practices. In summary, the report's prediction of a 50% surge in market demand by Q2 2026 encompasses several crucial factors that merit deeper exploration. The interplay of geopolitical tensions, economic recovery through innovation, the central role of the semiconductor industry, labor shortages, environmental considerations, and shifting consumer behaviors are all significant components that could influence the trajectory of the automotive, retail, and telecommunications sectors. Addressing these factors proactively can position companies to seize the opportunities presented by this anticipated growth while mitigating the risks associated with an ever-changing landscape. 1. Market dynamics and geopolitical influences. The anticipated surge in demand across the automotive, retail, and telecommunications sectors by 50% by Q2 2026 is significantly influenced by geopolitical tensions, particularly the US-China trade war. The U.S. has enacted stricter export controls on semiconductors and AI technologies, reshaping global supply chains and impacting companies reliant on these technologies. These geopolitical factors underline the complexity of the semiconductor market as nations navigate economic and security concerns while trying to maintain competitiveness. Understanding these dynamics is crucial for industries that depend on semiconductor technology. 2. Investment in semiconductor manufacturing. The CHIPS and Science Act has catalyzed over $200 billion in investments aimed at revitalizing domestic semiconductor manufacturing in the U.S. However, delays in funding distribution have affected production timelines, prompting companies like Intel and TSMC to reconsider their expansion strategies. As firms grapple with these challenges, the semiconductor industry is positioned for substantial growth driven by AI demand, particularly for high-bandwidth memory (HBM) and advanced chips. The anticipated increase in HBM's market share highlights the critical role of semiconductor manufacturing in supporting technological innovation across various sectors. 3. Technological advancements and AI integration. The semiconductor industry is witnessing an unprecedented demand for components driven by advancements in artificial intelligence (AI). The growth of AI applications has led to a notable rise in the need for high-performance chips, particularly HBM, which is expected to account for a significant share of the DRAM market value by 2025. Companies like Micron, SK Hynix, and Samsung are ramping up production capacities to meet this demand, indicating that AI is not only reshaping existing markets but also creating new opportunities for innovation. The interplay between AI growth and semiconductor technology will be a key discussion point as industries adapt to the evolving technological landscape. 4. Economic recovery and inflation impact. Economic recovery post-pandemic coupled with rising inflation has prompted insurers and companies across various sectors to adjust their strategies. The insurance landscape is evolving with increasing premiums and the need for innovation to address claims costs driven by social inflation and rising settlement values. The automotive and telecommunications sectors particularly are feeling the impact of these economic factors as they prepare for significant demand increases. Understanding the interplay between economic conditions and market strategies will be essential for navigating the anticipated growth in key industries. Here are 3 famous historical cases that exhibit similar themes of anticipated surges in market demand driven by technological advancements. Economic recovery and geopolitical factors. 1. The post-World War II economic boom 1945-1960s. After World War II, many countries, particularly the United States, experienced a significant economic boom. This period was characterized by a surge in consumer demand as soldiers returned home and began spending on goods and services. The introduction of new technologies such as television and household appliances transformed the consumer landscape. The automotive industry thrived as car ownership became a symbol of prosperity and freedom. The U.S. government also invested in infrastructure through initiatives like the GI Bill, which helped veterans purchase homes and further stimulated the housing market. This economic growth was also shaped by geopolitical factors, including the formation of international alliances and the Cold War, leading to increased production and innovation to support military and civilian needs. 2. The dot-com bubble, late 1990s-2001. The late 1990s saw an explosive growth in internet-related companies, leading to the dot-com bubble. Fueled by advancements in technology, particularly the rise of the internet, consumer demand for online services skyrocketed. Investors poured billions into tech startups, anticipating that the digital economy would revolutionize business models and consumer behavior. The growth was accompanied by significant speculation, as companies with little to no profit were valued at astronomical sums. This period also experienced geopolitical influences as globalization accelerated and tech companies sought to expand their markets internationally. However, the bubble burst in 2000 to 2001, leading to a severe market correction. Despite the crash, this era laid the groundwork for the modern tech landscape, with many companies that survived the downturn like Amazon and eBay going on to dominate their sectors. 3. The semiconductor boom, 1970s present. The semiconductor industry has consistently experienced cycles of growth driven by technological advancements, particularly with the advent of personal computing mobile devices. And now, artificial intelligence. The 1970s marked the beginning of significant growth in semiconductor demand as microprocessors became central to computing technology. This trend accelerated in the 1990s with the explosion of personal computers. More recently, the rise of AI and machine learning has generated unprecedented demand for high-bandwidth memory (HBM) and advanced chips, leading to substantial investments in production capacity and innovation. This market evolution has been significantly influenced by geopolitical factors, including trade relations and export restrictions, similar to the dynamics seen in the anticipated surge in market demand across automotive, retail, and telecommunications industries discussed for 2026. These historical cases illustrate how technological innovation, economic recovery, and geopolitical influences can converge to create significant shifts in market demand, reminiscent of the expected changes in the automotive, retail, and telecommunications sectors by 2026. The anticipated 50% surge in market demand across the automotive, retail, and telecommunications industries by Q2 2026 is driven by several key factors, including technological advancements, economic recovery, and geopolitical developments. 1. Technological advancements. The integration of artificial intelligence (AI) into various sectors is expected to be a primary catalyst for growth. AI technologies are transforming operations, enhancing efficiencies, and creating new business models. In sectors like automotive, AI will drive the development of autonomous vehicles and smart transportation systems. Retailers will leverage AI for personalized shopping experiences and inventory management, while telecommunications companies will focus on enhancing network efficiencies and customer service through AI-driven solutions. 2. Economic recovery. As the global economy continues to recover from the impacts of the COVID-19 pandemic, consumer spending is expected to rise significantly. This increased consumer confidence will lead to higher demand for automotive products, retail goods, and telecom services. The property and casualty insurance sector, which has been adjusting to rising inflation and claims costs, is also likely to see a rebound as businesses adapt to new economic conditions. 3. Geopolitical developments. Ongoing geopolitical tensions, particularly between the US and China, have prompted shifts in supply chains, especially in the semiconductor industry. The US has implemented stricter export controls, reshaping global supply networks and driving investments in domestic manufacturing capabilities. The CHIPS and Science Act has spurred over $200 billion in investments critical for ensuring a steady supply of advanced chips necessary for various industries. These shifts are expected to bolster market demand as companies adapt to new regulations and seek reliable suppliers. 4. Sector-specific growth. Automotive sector. The automotive industry is experiencing a technological renaissance with a strong focus on electric vehicles (EVs) and autonomous driving technologies. The rise in EV manufacturing is expected to significantly contribute to market demand as consumers increasingly prioritize sustainable transportation options. Additionally, the integration of smart technologies in vehicles will drive demand for advanced electronics. Retail sector. Retailers are expected to invest in digital transformation and e-commerce platforms, capitalizing on consumer trends towards online shopping. Enhanced supply chain management and personalized shopping experiences will be pivotal, driving demand for technology solutions and logistics services. Telecommunications sector. The telecommunications industry will see growth as demand for high-speed internet and 5G technologies increases. The ongoing rollout of 5G infrastructure and the expansion of smart devices will significantly contribute to demand in this sector. 5. Semiconductor industry as a backbone. The semiconductor industry's pivotal role in enabling advancements across these sectors cannot be overstated. The ongoing recovery in semiconductor sales, driven by AI and increased demand for high-bandwidth memory (HBM), will be critical in supporting the anticipated surge in market demand. Companies like Micron, SK Hynix, and Samsung are expected to ramp up production to meet this demand, thereby stabilizing prices and ensuring adequate supply. 6. Challenges and considerations. Despite the optimistic outlook, challenges remain. Supply chain disruptions, labor shortages, and geopolitical uncertainties could impact the pace of recovery. The market's ability to adapt to these challenges while navigating inflationary pressures will be crucial in determining the overall success of the anticipated demand surge. Conclusion. In summary, the convergence of technological advancements, economic recovery, and geopolitical shifts is expected to drive a significant increase in market demand across the automotive, retail, and telecommunications industries by Q2 2026. The semiconductor industry will play a crucial role in supporting this growth, with companies investing heavily to meet the surging demand for advanced technologies. While challenges exist, the proactive measures being taken across sectors suggest a promising trajectory for the coming years.